Good morning. You're watching The Market right here in ET now with me, Aisha Faridi, Nikunj Dalmia, as well as Avan Dabash in the studios. And the cues from D Street first, before Wall Street. And we actually erased some of our gains in the last hour of trade yesterday. Once again, it's been a very, very quiet move for the indexes the last two trading sessions, because even if you were to move or rather map how the markets have moved from the session lows to the highs, it's been a very, very narrow band. And yesterday as well, it was pretty much the same picture. The struggle to cruise past and hold above that 19,400 mark continued. Key heavies like HDFC Bank, ICICI Bank, they continue to be drags. And yes, FIIs continue to sell India. Fourth session considering they've been sellers. But yes, the broader market outperformance, that clearly continues. And mid-cap index was once again at an all-time high.
Yeah, it's amazing, right? I mean, you think about it that you are staring at a market where one leg of the driver of this rally from April to July or April to June was global liquidity. And that global liquidity, even though it is no longer that supportive, the markets are holding on. While Nifty may have slipped yesterday from the day's high, the fact that you're holding above key levels, there is no panic in the market. There are no margin calls in the market. Nifty is not exactly cruising along, but mid and small cap stocks, there is a very smart rotation within that space. So I think it is very, very important for us to flag off that in this market, you need to have a differentiated approach where everything is not great, everything is not bad. For the sake of turning bearish, don't turn bearish. And for the sake of remaining bullish, you don't have to remain bullish. In general, the market action, I think, at best is mixed. There is a fatigue factor which has kicked in large cap stocks on expected lines, but there is no panic. There is just no temptation to book profits or even not participate in the small and the mid cap stocks. So it's becoming very selective, and depending on which pocket of the markets you're focusing on. Imagine if you're trying to view the market based on the bank Nifty.
Yeah,
it's been a washout. You're making a market if you're making a market view based on Nifty, which is what everybody does, you would say, "Arey market mein kuch nahi ho raha hai."
Flat.
You're making a view based on small and mid cap stocks, you would say, okay, my stock is at an all-time high, the bull market, your stock is at an all-time high, catch me if you can. So the narrative is different depending on whom you're asking. But the only thing is, Nikunj,
I mean, not to say that traditionally we've not had these lull periods and very extended lull periods also in the market. But is this calm going to lead to a storm, or is it going to lead to some kind of downside? I mean, upside, downside, will the Nifty take direction? Will the mid caps also stall here?
How do you judge that? You judge that by based on what is, let's say, in store and what are the triggers for next 6 months. Let's say from August to year end. You will have earnings season, you will have festival season, you will get indication on where the vegetable prices and the food inflation is headed, and you get a complete clarity on finally whether China is off the block or not. Earnings, I think markets pretty much know that is going to be decent. Consumption patterns we know pretty much are going to be decent. So I think the festival season this time really is crucial in terms of understanding the demand setup. The activity in China, I think, is of paramount importance to understand which way global macros are moving. And then forget tomato, now it's tomato and onion. Both the prices put together, I think they would be deciding. So I think, if you want to ask me, one lead indicator for me is going to be the curry test.
Yeah.
Right? Tomato, onion, ginger.
Pretty much the base for all Indian vegetables.
Yeah, so actually, just like we called it the summer rally of 2023, let's use the word curry test for next couple of days.
Right, you are. Or even the tomato test, whether or not, some of these fast food joints has restarted using tomato ketchup.
Burger without, without tomatoes. Are they giving that ketchup free? No, I haven't been to.
Yeah, they are.
They are.
They are. They are.
Now
they are.
Okay.
But that's inventory,
Well said.
Okay, let's in fact talk a little bit more about that divergence, and we were talking about the kind of underperformance that we've seen in the bank, and if you use that as an indicator in the last 1 month, for instance, while the index itself has been exceedingly flat, the Nifty Bank Index has underperformed. A near 4% drop is what you've seen in the Nifty Bank Index. Heavyweights like HDFC Bank, Kotak Bank, they've been the worst performers in the last 1 month, and Nikunj, the combined weightage here is nearly 40% on the Nifty Bank Index. So that divergence, as you were saying, really continues, especially when it comes to the banks.
No, I mean, IT is up and banks are down. It's always that, I don't know why, but very rarely IT and banks are on the same side of the trade. 2020, The comeback in IT, no comeback in banks. 2021, IT was ruling and banks were underperforming. 2022, the reverse. IT started correcting and banks, they started coming back. 2023, the divergence, I think, is only becoming better. Now, the question you would ask yourself is that why banks are underperforming? And even though banks is one space where there is weightage, where there's ownership, where there is a huge amount of consensus trade, are banks now priced to perfection, which is that this whole template of good credit growth, low NPAs, strong NIMs, is that in the price or fundamentally something is changing? I don't think as of yet fundamentally something is changing in terms of banks, and within banks also you are seeing a complete divergence between what an Kotak has done versus what an IDFC bank has done, how SBI has moved versus how some of the smaller banks like AU Financials have moved. So while the bank Nifty may not give you the true rhythm of what is happening in the banking space, I think within the banking space you will see a lot of divergence going forward. I doubt that IT will emerge as the go-to sector, even though it may look like cheap and contra. I think banks is where the leadership is. Right now markets are going through an adjustment process when an overweight trade is getting challenged. But if you have to really watch out for a space where you want to be a buyer, rather than avoiding that space, even though it's a consensus view, I think it's banks. I think large banks and large corporate banks will come back. Mid-tier banks, the re-rating has happened. PSU banks are looking cheap to me. I'm not so sure about NBFCs. I'm not so sure about what will happen to some of the retail-facing franchises within the banking space. But corporate banks right up there. PSU banks, SBI, BOB second, and to some extent, I think some re-rating in some of the mid-tier private banks, I think is still left.
The other aspect in the market is the kind of spike that we are seeing currently in US bond yields. And if you just look at the data points, I mean, yes, it is impacting capital flows to emerging markets like India, but not hugely so. Even if you were to map the sell figure that we are getting on a daily basis, that's not as large.
So Asha, historically what we've seen and observed and what all of us have reported, all three of us, is that when bond yields they go higher, equities they come down. It's very simple. Interest rates are like gravity. And the higher the interest rates go, the more the gravitational pull is going to be. If bond yields have gone back to levels of 4.4, what they were, let's say, before COVID, then why are markets not coming down? I think largely the mystery, there's no mystery. I guess the reason why markets are not panicking is because A, markets think that this inflation is going to be transitory. B, there is a China factor which clearly seems to be indicating that commodities are not going to be any kind of a linear uptick. C, the US economy is not doing all that great that the dollar index is going to sustain any kind of an uptick. So all the factor, what causes inflation? What causes inflation essentially is the movement in commodities and dollar index. We've just discussed that. Second, let's look at the view in terms of where the economy, where the world is headed. It's not looking all that great. So markets expect that inflation is going to be transitory and bond yields will come down. But if you now start moving closer to 5%, then we really have a problem. Then you could ask yourself, is that 5% versus emerging market risk? I think then it will get nullified. You stay here, you kick around closer to 4%, 4.4.12, markets will say okay. And second, I think what also matters, Aisha, here is that at the beginning of the year, the market view was that US will head into a recession. Soft landing, hard landing, that is what we were debating. Now that template, that scenario is off the table. What are we talking about? Second half, US will have a smart recovery or anemic recovery, but it will have a recovery. So the R of recession has become R of recovery. And that is what I think markets are adjusting to.
Yeah, and it would be interesting as well to find out what the global commentators have to say. Just a quick roundup of how the global markets shaped up yesterday. Well, you did have the S&P 500 that fell about 1/3%. It was really weighed by concerns of that rising treasury yield. The Nasdaq eked out a very small gain, and the Dow Jones as well wrapped up about 0.5% lower. This morning as well, Asia is looking a little bit mixed. Let's find out then what the commentary is from the likes of Mohammad El-Erian and some others when it comes to the inflation and what the expectations are as well from Jackson Hole. Vinny is here to sum it all up. Morning, Vinny.
Good morning, and absolutely in terms of the commentary, we are going to start with first Mohammad El-Erian. He has a couple of comments coming in. One is in terms of, inflation, which he said that high inflation actually impacted the employees in US, and that is why we've seen that purchasing power reducing, and they were eroding in terms of the purchasing power. But now what he's highlighting is that, seems like the employees are succeeding in terms of the securing the real wage gains, and which is helped by mainly the resilient economy as well as stronger bargaining power for the labor, is something that is supporting the US employees. Other than that, he also is highlighting in terms of Federal Reserve's rate hikes, and he said that yes, they embarked on the rate hike a bit later is what the highlight is coming in, but it was the most aggressive series of interest rate increases in 4 decades, and now they think that Fed now needs to actually think carefully about how aggressive it should actually be in terms of squeezing out what is left of the inflation, a decision that holds a major implication in terms of the consumers as well. So these are important comments coming in from him, and obviously he's highlighting that one should actually watch out for in terms of the earnings for Nvidia as well as Jackson Hole Symposium that will be there this week as well. So important commentary will be watched out by him on that front as well. Now, other than that, we have a commentary that is coming in from Peter Schiff, and he's highlighting in terms of when there are a lot of new programs that have been rolled out by the government, and they say that this is going to be in terms of the taxes. They will be paying an inflation tax on this as well, and that is a concern that he is highlighting, that yes, government is rolling out a lot of programs, but that is a concern that everyone will be having to pay inflation tax. Lastly, we have commentary coming in from Peter McGuire, and this is actually coming in that he's highlighting that Fed's annual economic symposium that is kicking off on Thursday, but highlights are obviously going to be of Chairman Jerome Powell's flagship speech that will be there on Friday, so that is everyone is watching out for as well. And also in terms of the US yields that is trading at the highest level in this cycle, he's signaling of interest rates that could be a catalyst either of a breakout or a rejection that will be driving the dollar accordingly. So these are the key highlights that he's waiting and watching out for as well.
We leave it at that. Well, all things said, today the action is not about the world, but actually outer space, right? India is going to be waiting for Chandrayaan 3 to make a landing on the lunar surface, and this is going to be at 6:04 p.m. today. India will be the 4th country to be soft landing on the moon after US, China, and erstwhile Soviet Union as well. But we will be the first ones to make it to the south pole of the moon. Now, remember, the possibility of finding water makes this all the more very important for India to make a successful landing. In fact, we spoke with K7 as well. We will get you that excerpt in just a short while from now. But first, let's take it across to Kunal and Naresh and find out what they're making of the trading structure so far. In fact, instead of Naresh, we have Vaishali joining in today. Vaishali, hi, morning. Kunal, morning to you as well. Vaishali, how quiet is it looking like for the Nifty? And do you think we're going to take a directional move? I mean, the last hour yesterday showed that we are getting in the negative, dragged by banks. Do you think that could fall further today?
Well, that time will tell. Good morning, first of all, to all of you. We need to wait for Bank Nifty to break 43,800 levels, because we've been seeing that every attempt of a bounce back, we see selling pressure. So the view remains sideways. And as long as 43,800 in Nifty is held on, we would maintain a positive view with a bounce back. And likewise in Nifty also, 19,250 would hold as a crucial support. So let's wait and watch, because these levels need to break decisively to realize that, yes, market is in for further correction.
All right, Kunal, let's get in your outlook. And it's interesting just to talk a little bit more about that underperformance that we've witnessed within the banks. And the heavyweights have really contributed to the downfall. So what is it that you're making by way of trend and the divergence between IT and banks?
So banks are underperforming. IT sector is not participating. You don't have many leadership from the auto pack. So many of the sectors as well as stocks have underperformed in this leg of the market trend. And I think what's adding to more salt to the injury is the indicators on the index, on the Nifty specifically yesterday, coming back into the negative territory. That should probably be an indication that maybe the near-term trend on the indices could now get into a bit of a slightly increased momentum on the downside for the indices. So I think that's one of the concerns for the Nifty, which has emerged in the last trading session. Now, interestingly, the data on the open interest, which we were looking out for in the last couple of days, has two different sides. So, for example, on the Nifty and the Bank Nifty, we have seen a definite amount of unwinding of open interest for the current series. The premiums have reduced for the Nifty futures as well as for the Bank Nifty futures, but the open interest is rising in the next series, which means shorts are being carried to the next series right from the start of this week, and we enter the penultimate of the expiry week for the index. So that itself indicates that market participants are actually looking out for this kind of a sideways zone on the index as a rollover strategy for the Nifty futures as well as the Bank Nifty futures. So net expecting the markets to get into a bit of a downward trend, and hopefully we could probably be retesting the 90,300 mark and below as well.
Let's talk stocks as well. Kunal, on your list today?
So I'll go with a mixed strategy, one buy and one sell. The first one is a buy on BEL. That stock showed a lot of strength, trading above 130.31 mark, which is the previous swing high. So 138 as a target for BEL and stop loss at 127. I'll go with a sell on Eicher Motors. The stock has come back towards a resistance zone about the 3,350 odd mark. So would suggest a sell with a target of 3,275, stop loss at 3,400.
Right. Vaishali, let's have your stocks as well.
So I would recommend a buy in NMDC because yesterday, after a very long time, we saw a decisive breakout coming in. So above 119 is the breakout level. So if we see a sustenance, in which we saw the closing was quite strong. So I would recommend a buy for a target of 125 with a stop loss of 117. The other stock is also in the mid-cap category, that is Torrent Power. We saw after a long consolidation yesterday, new round of momentum setting in. Volume is also picking up. So I would say it's a buy with a stop loss of 640, and it would be a positional trade for a target of 700.
All right, there you have it. That's the view coming in from our chartists, picking out their top stocks to watch out for in trade today. But let's find out then which are some of the other stocks that we'll be putting the spotlight on. And we've got Somit right here in our studios to discuss that. And looks like pharma is hogging the limelight today. Those reports coming in from the Economic Times regarding Torrent Pharma that they are looking to buy the promoter's stake of Cipla.
Well, yes, that's what the ET report says. Now, if you look at the companies, Torrent Pharma is the 5th largest pharma company, while Cipla is the 2nd largest. Cipla's promoter stake is valued at close to 33,000 crore rupees, while the market capitalization of Torrent Pharma stands at around 67,000 crore rupees. It will be a very large acquisition if this goes through for Torrent Pharma. But what we spoke to analysts and what we're understanding at this moment is that though this is a very large acquisition for Torrent Pharma, it's not completely impossible, because even in the past, we have seen such kind of acquisition like Sun Pharma acquiring Ranbaxy. At that point of time, Ranbaxy was the largest pharma company when Sun Pharma had acquired that asset. And also what the analysts are suggesting is the fact that in pharma at this point of time, the only way to grow is inorganic. And that's what Torrent Pharma is looking into. They acquired Curatio, they acquired Unichem, and now they might be looking at Cipla also as a asset, because Cipla's domestic business is irreplicable as per analysts, because the respiratory business is very strong and none of the other companies in the market have that kind of similar respiratory business in India as well as in the global market. Also, what they're suggesting is that Torrent debt could be an issue for them, because right now they had brought down their leverage ratio at around 1.3 times. Earlier it was more than 2 times, and that was a concern for the street, and this time they had managed to bring it down to 1.3 times. But again, if they go ahead with this acquisition, the debt will rise for the company and the leverage will also increase. But that is one thing that could be a concern for the street. And the second fact that could be concerning for the street at this moment is every time such large acquisitions happen, we have seen issues propping up post the acquisition of, in case of Sun Pharma, Ranbaxy, then there was Viatris, Mylan also, which struggled with the biologics business and they had to sell it to Biocon. Also when API went ahead and acquired Thyrocare, we had seen issues propping up and the businesses were not doing well after the acquisitions. So that is another concern that street currently has when it comes to Torrent Pharma. But what is your view here, Nikunj?
You know, I'm thinking about Cipla. Everybody's talking about Torrent bidding, Blackstone bidding, but that means that if the Cipla stake is on block, which it looks like now, there is going to be a price war. So I would say that the first stock to buy is the first one to understand here is Cipla, because whenever there is a bidding and whenever there is a price war, the existing shareholders, minority shareholders of Cipla are likely to get a good deal. It's not going to be in distress asset where a large promoter is suddenly looking at offloading their commitment in the company. Assets like Cipla don't come out. I mean, this is like one of the oldest, one of the finest company in India, and when an asset like this comes, there is going to be a price war which really would be at play. So what it means for Cipla shareholders in the near term, I think is more exciting rather than whether it's going to go to the whether the deal will go through or not, and whether it's going to be a consortium of P investor, whether it's going to be Torrent Pharma. Now within Torrent Pharma, Sumit, you're absolutely right that look, In pharma, acquisitions have happened in the past, and acquisitions is something which some have worked and some have not worked. But what we need to understand here is that if Torrent Pharma has to take this kind of a large bet, will they take it in the listed entity? Will they take it in the holding company, which could be ring fenced with the promoter entity, or there could be some P investor who could come on board with Torrent Pharma to go ahead with this deal? I don't know those details, but I think for me what really matters here is that Torrent Pharma has good track record of turning assets, so they understand acquisitions. B, they have to be very careful of capital commitment here, so you do not want a situation where they're trying to bite much more they can chew. And C, what it means for Cipla. I guess the interesting one now would be Cipla, but it's not going to mean PE, just a clutch of PE investor led by Blackstone. It's going to be maybe another pharma company who understands the business, who may be just looking at throwing their ring in the hat, so to speak.
Okay, that's the word coming in on Cipla as well as on Torrent Pharma, and that news that's surrounding it. But let's move right on and discuss auto in greater detail, and that's largely on the back of the kind of note that we've got from Nomura talking about the channel checks with respect to Harley Davidson and the Harley Triumph, of course, the tie-up. And they're saying that as of now, the deliveries started May end, and 95% of the bookings are looking for the top model.
Well, it's three companies that is in focus: this Bajaj, Hero Moto, and Eicher. And Eicher is the one that the street will be watching out for, because for Bajaj and Hero, additions coming in from be it Harley or Triumph is not going to add too much on the EPS front. But if more bookings go towards Harley and Triumph, then it's Eicher who's going to lose out. And that's what the note is also suggesting, that in fact for Harley, what they're saying is that despite the fact that online bookings have closed, the dealers are still receiving every 5 to 10 bookings every day, which is around 320 bookings in a month, and 95% of the bookings have been done for the top models. And in both cases, be it Triumph or Harley, the dealers are suggesting that many potential buyers from Royal Enfield Classic 350cc segment are choosing these two bikes over RE. And they're saying, for case of Harley, they're saying that deliveries are likely to start from November end, and for Triumph already deliveries have started in the last week. And for Triumph also, they're saying that nearly 20 to 30 bookings per day is what they've been receiving, both from online and offline mode. And the demand most is for the Speed 400 model of the company, and the average waiting period when it comes to Bajaj Triumph is nearly 4 months at this point of time. So strong booking number continues for both the companies. How much they gain on the EPS front is very less, but how much Eicher loses out is something that we need to watch out for here, right, Nikunj?
And a large knee-jerk reaction came when all these announcements came in for both Bajaj as well as
I heard
Hero.
Kunal saying a sell on Eicher. You look at Eicher stock, let's actually look at it. I'll request the producer to, let's say, fire the year-to-date chart of Eicher, Hero MotoCorp, Bajaj, and I don't think any of the two-wheeler stocks have done exceptionally well, given that the year really belongs to auto so far. Eicher is flat. Then you saw Hero MotoCorp 7-8% higher, and you look at Bajaj. I guess Bajaj in a much more comfortable position, which is 27% higher. So my limited point is what Nomura is saying. We've discussed it yesterday.
Yeah.
It's like you just endorsing pretty much what is obvious. It's not going to be easy for Eicher to. It will not be easy to displace Eicher in terms of the market leadership. The brand recall, I think, is absolutely phenomenal, but it's not impossible. They will lose market share. Their premium pricing. See, what are the margins? The margins in the traditional two-wheeler space is in teens. For Eicher, it's north of 20. They have dominant market share and dominant margins.
Monopoly pretty much.
Monopoly pretty much. That will get challenged sooner than later. It's like saying Maruti, every small car which was sold in India 3 years ago, 70% was coming from the stable of Maruti, even though at one point in time you had 12 car manufacturers. So it will have an impact. I mean, Maruti margins, because of competition, it kept on coming down. So I think the same will happen for Eicher. But I mean, what Sumit is saying absolutely right. Will this move the needle for Hero and for Bajaj in the short term? I doubt. I guess for those two companies, and since I was in Pune, we interacted with the management of Bajaj Auto, you've come with the deep understanding of the business when you chat with them. You get a sense that the domestic market is not going to come back in a hurry. It's going to be a 4-5% growth. And markets will say that why would we go for a company or a sector where the growth is 4-5%? And whether it's tailwinds or whether it is rural economy, the sector is not in a high growth stage, where rest of the market, there are a lot of companies which are giving you 15-20% growth.
Yeah, and the EV disruption is real, right? You heard it from Bajaj Auto yesterday. Sumit, thanks for highlighting all the stocks. Let's focus on Bharat Forge. What are their targets in the short, medium, as well as the long term? In fact, Nikunj had an exclusive chat with joint MD Amit Kalyani, and he shares the growth roadmap for the company. He says a lot of the new businesses will turn from incubation to growth mode.
Short term, medium term and long term. For Bharat Forge, for short term, when I say short term, 1 to 3 years, that's a short term for an entrepreneur. 3 to 5 is medium term and 5 year plus is vision. So for the short term, what is the opportunity? What is the challenge?
For the short term, very clearly is turn around our global businesses, grow them, maximize the growth of our defense business, grow our acquired industrial businesses, continue growing our aerospace business with whatever capexes we already have done, and continue growing our component business. Okay, that should give us a 15% plus CAGR. That is what we expect. Sometimes it will be higher, sometimes it will be lower, but that's what we expect. Then for the 3 to 5 year, build the defense business into a whole meaningful business. A meaningful business means, going from 1,000 crores to 4,000-5,000 crores. Industrial from, 2,500 to again 4,000-5,000 crores. Aerospace, hopefully take it to a 100 million plus business. And, also EV to couple of 100 million, if not more. So that's the way we look at the 5-year horizon. So EV, in my opinion, could even be bigger than that.
So if I say what happens in the market in the short term is a function of price discovery, but for an entrepreneur, for Bharat Forge, अच्छे दिन नहीं बहुत अच्छे दिन आने वाले हैं.
Yeah, I think अच्छे दिन ही आने वाले हैं, because see, we have no, either as a company or as promoters, we don't have any stress. Okay, the company is not loaded with debt. We have a lot of opportunity. We have great people. I think our biggest strength, more than anything else, is the phenomenal people we have in every part of our business, right from the shop floor to the engineering to sales and marketing. Everyone, they're very passionate about what we do, and to harness that passion and to get the most out of that passion is really what is the job of management.
Welcome to ET Now on the Go, our new innovative idea, where ET Now will be on the go, and they would be covering some of the most innovative and beautiful cities in India. And we are kickstarting this series with Pune.
Pune is actually quite a delightful city. You have a very eclectic mix. You have the corporate crowd, you have the military, the armed forces crowd, you have a good art and culture.
People are comfortable with India. People have built long relationships and have good experience of working with India. And Indian manufacturing has also made its mark in various fields. And I think people see India and its skilled manpower as one of the biggest untapped opportunities to grow Indian manufacturing and global manufacturing.
Welcome back. It's a bit soft for the global markets, and you've got the Asian markets looking a little bit mixed this morning, but lots to track, including the 3-day BRICS summit, which has begun amid a lot of buzz over a possible bilateral meet between the Prime Minister Modi and China's Xi Jinping. The Prime Minister has said that India will soon become a $5 trillion economy and is poised to become the growth engine of the world in the coming years. Speaking at the BRICS Business Forum Leaders Dialogue, Prime Minister Modi highlighted that mission mode reforms have improved the ease of doing business in India and has also invited businesses to be part of the country's development journey. Let's listen in.
वैश्विक अर्थव्यवस्था में उथल-पुथल के बावजूद भारत आज विश्व की फास्टेस्ट ग्रोइंग मेजर इकोनॉमी है। जल्द ही भारत $5 ट्रिलियन इकोनॉमी बन जाएगा। इस बात में कोई संदेह नहीं कि आने वाले वर्षों में भारत विश्व का ग्रोथ इंजन होगा। ये इसलिए है क्योंकि भारत ने आपदा और मुश्किलों के समय को आर्थिक सुधार के अवसर में परिवर्तित किया। पिछले कुछ वर्षों में हमने मिशन मोड में जो रिफॉर्म्स किए हैं, उनसे भारत में ईज ऑफ डूइंग बिजनेस में लगातार बढ़ोतरी हुई है। हमने कंप्लायंस बर्डन को कम किया है, रेड टेप को हटाकर रेड कारपेट बिछा रहे हैं। जीएसटी और इंसॉल्वेंसी एंड बैंक्रप्सी कोड के लागू होने से इन्वेस्टर कॉन्फिडेंस बढ़ा है। रक्षा और अंतरिक्ष जैसे क्षेत्र जिनको प्रतिबंधित माना जाता था, आज प्राइवेट सेक्टर के लिए खोल दिए गए हैं। हमने पब्लिक सर्विस डिलीवरी और गुड गवर्नेंस पर विशेष रूप से ध्यान केंद्रित किया है। टेक्नोलॉजी के इस्तेमाल से भारत ने फाइनेंशियल इंक्लूजन की और एक बड़ी छलांग लगाई है।
All right, that is the projection for the kind of growth that the Indian economy could see by the Prime Minister. But let's shift focus then to more news and updates. And the market watchdog SEBI has released a second interim order into Brightcom's preferential allotment issue. Let's take it across to my colleague Ankur, who joins in. Ankur, what exactly does this mean for the company going forward? What is SEBI saying?
Yes, in an interesting order in the case of Brightcom, the regulator has taken a stringent action once again, and it has barred CEO as well as the CFO of the company from holding any position in any of the listed companies. Now this action has come because there is an allegation that wrongdoing has happened in the company, and there is manipulation which has been found prima facie by the regulator. Hence CEO and CFO has been barred from the market. Apart from that, there are other 22 notices as well which has been named in the order, and all of these have been barred from trading in the shares of the company. Apart from that, the regulator has also barred the auditor of the company from being involved auditing of the company, and this has been taken because the regulator believes that between 2018 to 20 there has been wrongdoing which has happened in the company allegedly, and the amount being more than rupees 1,200 crore. Now this is first time the regulator has come out with this kind of order twice in a period of 4 months for the same issue, and this has been specified in the interim order. Remember earlier also the questions had been raised to the management, but even after that the regulator finds that prima facie there is a problem with the company, and hence the stringent action has been taken.
Okay, in the meantime, Goldman Sachs has initiated a coverage on the Indian IT pack with buy calls in L&T Mindtree, Infosys as well as TCS. Vinny is here to tell us why the brokerage has now turned bullish on these names. Vinny?
You know, we're seeing a note that is coming in from Goldman Sachs on IT. When you look at it, LTI Mindtree initiating a buy over there with a target price of 6,310 rupees per share. For Infosys, they've initiated a buy and a target price of 1,600 rupees per share. TCS buy rating initiation with a target price of 3,930 rupees per share. Now for Tech Mahindra and Wipro, they have initiated coverage but with a sell rating and given a target price of 1,010 rupees per share. And Wipro, they've given a sell rating and a target price of 385 rupees per share. For HCL Tech, they have a neutral rating and a target price of 1,160 rupees per share. Now, overall, why is this initiation coming? One, they believe that the growth in FY24 for IT companies, yes, that could stay muted, but they expect an acceleration in growth in FY25, especially in terms of generative AI. That's going to be aiding both in terms of the revenue as well as margins for IT company, but on impact will be on a gradual basis that, you know, this will start coming in for the IT companies. In terms of margin outlook, also they believe that the margin outlook is improving on a lower supply side pressure. They expect the operating profits to growth to be at around 12 to 15% over FY25 and FY26 to be faster than the revenue growth as well. And overall, in terms of valuation, higher versus the history, but is higher than what we've seen in the past and the historical average, but in line with the relative to that index when we compare. So yes, higher, but historically it is relatively in line with what we would be comparing. Also, what they highlight is higher multiples are warranted to grow for growth for the IT and tech company spends as the industry is seeing better growth there. So let's keep an eye out on the IT pack on this on the back of Goldman Sachs report.
Oh, yes, indeed, we will. Let's also connect with Dipan Mehta to find out his views on the markets, individual sectors, and of course, stocks. Hi, Dipan. Good to have you on board. We're all scratching our heads talking about, this massive divergence that we're seeing within the banking sector and the rest of the market, in particular, for example, IT. No doubt some of the heavyweights have had it rough within the banking space, but there's been a 4% fall in the last 1 month at a time when the Nifty has done precious little. What explains this?
Good morning and thank you for having me on your show. There's only one explanation for it. You just have to look at the mid-cap index. It is just soaring and soaring. And we are seeing so many blue chip, good quality mid-cap stocks go to all-time highs of 52-week highs. So all the action is concentrated over there. And I think investors are focusing on companies which have delivered good set of numbers, where there's good earnings visibility and somewhat reasonable valuations, and focusing on those companies and bidding up the stock prices over there. Also, typically mid-cap counters are not that liquid. And with the way the money is coming into small and mid-cap mutual funds, as well as portfolio managers and AIFs, I think we are seeing concentrated buying taking place in select mid-cap stock, which is driving stock markets higher. But rest of the large cap stocks, the bank stocks are being ignored at this point of time. But this is a cycle, and it can easily turn, based on which levels one cannot say. But we have seen this cycle play out many times, money going from large cap to mid cap to large cap, as well as sector rotation. So these are all the characteristics of a kind of a strong bull market. And I think it's just a matter of time before this rising tide lifts all boats.
Comparison which I would like to do, and that is Aditya Birla Fashion, Arvind and Trent. All three have one thing in common: fashion. All of them are in a sense run by great families. The Lalbhais, Arvind, Tatas, Trent, Birlas, Aditya Birla Financial, Aditya Birla Fashion Retail, ABFRL. But just look at the change in 52 week. Aditya Birla Fashion not done anything at all. Arvind still done better. But Trent, I guess, has been this consistent compounder. Now stretch it up in last 10 years. Let's do 10 years. Wow, 10 years. Yeah, that's a good comparison. 10 years, what has changed? And 10 years is a good time to understand that, how much stickiness you have to your fashion brands. In last 10 years, Arvind is up 63%. Yes, last 10 years, Arvind is up 63%. Trent is up 14 times. And put it Aditya Birla Fashion Retail. Why am I bringing it up? Because Trend has made a new high yesterday. That's why I'm bringing it up. And let's look at Patricia. Let's look at Aditya Birla Fashion Retail. There you go, 32% up. So, Dipan Mehta, 10 years ago, everyone said Trend is expensive. They continue to say the same. And for those who said that Trend was expensive, what have they missed? They've missed a multi-bagger in last 10 years. What's happening in Trend?
Yeah, Nikunj, good morning, and thank you for this fantastic analysis. And for the record, we are also trying to analyze 10-year returns of stocks in this earnings season. And really, it's a revelation. Stocks which were expensive 5 years, 10 years ago as well have turned out to be multi-baggers like Trent, or at least have delivered compound anywhere from 15 to 30% type of returns. And I think this exercise is important, because today the biggest deterrent to buy into a good quality business is the high price to earnings multiple. And if you have the kind of history that even 10 years ago, 5 years ago, expensive stocks are still delivered, that just ends up building conviction in buying good quality businesses. If you look at the track record, that's the financial track record of all the three companies you named, you'll clearly see that Trent has been consistently compounding on its earnings and have strategically, I think, grown their business. They have entered into new brands like Zudio, which have done exceedingly well, which is into value retailing. The balance sheet quality has been exceptionally good. They are generally avoided getting into inorganic kind of growth opportunities, especially acquisitions. And they have created a lot of value in subsidiaries. I think Zara is a very huge success story for Trent. And mind you, some amount of valuation in Trent is coming from the joint venture and the subsidiary companies per se. But at these levels, I think to get into Trent, I'm not so sure, because there's a limit to how much valuation you can pay also. But I think if the price earnings to growth, the PEG, is around about 2 times or so, then I think even if the PE multiple is high, you will still get a return on the stock. And one more stock I would like you to add to the list is Shoppers Stop. And I think what the management has been doing over there has gotten away a bit unnoticed. Because you look at the last 2-3 years' performance since the new CEO has taken place, the entire business has been reorganized. They are focusing on private labels, they are focusing on cosmetics, and the performance has been pretty decent. And I think from a valuation perspective also, it is quite reasonable. I'm not suggesting recommending Shopper stock. It's just that it's one of the companies which has been quietly moving up last 2-3 years on the back of a very sound financial performance. It had been a bit of a trouble, but clearly it's turned around and entering into a new growth phase.
That's interesting analysis on retail. Let's get interesting analysis on BHEL. That's the stock on the editor's radar today. Firstly, Nikunj, what a move yesterday. And the stock has gained the most in the last 2 years. And of course, the order inflow has been strong and a lot of other levers.
When I saw the stock, I took my glasses out like this and I said, okay, am I getting too old? It is actually BHEL which has gone up 10%. Yeah. Look, BHEL has been a consensus sell. And the reason why it's been a consensus sell is because they've really not got anything right in terms of the migration, where other private companies, they've really managed to take a giant leap forward. BHEL has not really done anything which could be called exciting, rather than, and even though they have a huge advantage in terms of they have access to a lot of government orders. The Vande Bharat order also was more like a compulsive order where they've got the order but margins are just not there. Now, given that what changes are happening in the entire power space, especially in terms of the battery storage, where large investments would be moving, in the areas of pump storage for power, everybody is hoping that BHEL, given that they have an advantage and they do have a technological presence, they will be able to crack the code. Now, there is a little bit of storytelling which I think has started in the power sector, especially when it comes to battery and especially when it comes to storage. Capability, ability and delivery. Capability, ability and delivery. So, I think BHEL has capability, they have availability because they are a government company, but can they deliver? I don't know. My limited point is that the existing business is not great enough for the stock to stay even at 100 rupees. But if they are able to change the complexion of the business, which some companies have done in the past. We've seen a lot of PHU companies, how they've morphed and how they've migrated. Can BHEL really execute the new complexities of the business in terms of battery storage and energy storage? If they do it, then trust me, BHEL becomes a very different kettle of fish. But I guess there is a bit of a hope, maybe a hype. I'm not challenging their ability or capability, but I would wait for the delivery.
Okay, so question is this going to be a turning point now for BHEL, Aisha? And that's something that we need to watch for closely.
Oh yeah, we absolutely do. Kunal, some follow through after that mega move yesterday on BHEL?
Well, I believe that the stock should see a rise substantially from current levels as well. Yesterday there was a huge jump in terms of volumes for BHEL. The stock managed to take, or zoom past about the 100-105 mark, which had been a resistance of sorts. I think in July as well, the stock had taken a pause at 104 or 105 levels, retraced back towards 95-96 mark. And this time around, the stock has given a classical breakout, making the stock back towards, I think, a 3 or 4 year swing high. So momentum is on its side for BHEL. Volumes have made a comeback. I believe that the stock should see a decent follow through on the upside. I would expect 115 to 120 as the next set of target range for BHEL over the very, very near term.
Dipen Mehta, there was a time when BHEL was like the go-to stock. It had become the Navratna. But it has really been a lost decade for BHEL. They have not really managed to migrate up in terms of where the private sector is. Now, there is a belief that BHEL is ready to do what other PSU companies have done in the last 2 or 3 years. They are changing tracks and they could have a long and a strong, formidable presence in the energy storage space. Do you think this time around BHEL can actually deliver?
See, Nikunj, I think per se the biggest risk factor in PSU stocks is execution. Be it banks or engineering companies, service companies, across the board, the biggest challenges are execution. From that point of view, I think BHEL also has not been the best in terms of execution, even when they had the order book position going, partly their fault, partly, environment where there were delays in projects for various other reasons. And now I think that we are seeing a fantastic build up in the capex cycle. Companies like BHEL, which have the spare capacity, which have the technology, which have been more or less pre-qualified for many projects and orders, are getting the true benefit of it. So I think that from valuation perspective, from near-term prospects, or also medium-term prospects, certainly there is a trading opportunity in BHEL. And with the kind of momentum that is in the stock, I'm sure the stock can rally easily by another 10-15% or so. But I wouldn't like to invest in BHEL in the longer term. Our preference is for good quality engineering companies in the private sector, and with disclosure that we and our clients are invested, companies that would fit that criteria, like Larsen & Toubro, Praj Industries, VA Tech, Vabag, SGEC, IS, GEC Engineering. And what's the common thread? I think great track record, good management of the balance sheet, high return on capital employed, and some good quality work which they have done. You could add ITT cementation also to that list. So from that perspective, our focus is more on good quality businesses which have stood the test of time and which are still available at reasonable valuations.
I'm going to just shift gears, and Kunal, go back to Escorts, all-time high.
I think it's an exceptional performer. Last 5 odd days, the stock has rallied up, I think, 200 points. I was actually looking at 2500, 2550 as a zone for Escorts, but the stock has now migrated towards 2900, 2945, where the stock closed yesterday. Excellent momentum, great volumes for the stock, and the chunk in the last 4 or 5 days of volumes is almost, I think, 5x or 7x the volumes in the last 7-8 days when the stock was consolidating at this 2500 mark. So, I think it's just an exceptional move for Escorts. Month after month, quarter after quarter, we've seen the stock performing, seeing a lot of participation, consolidating time and again, and then moving up higher by, in a very short span of margin by 10 to 15%. So, exceptional chart for Escorts.
It's up 30 times in 10 years.
Yes.
30 times. 30 guna ho gaya 10 saal ke andar. And this is not like
that most names would be, no?
No, Aisha. I mean, which auto company has done 10 times, even 10 times in the last 30 years? I mean, the exception there would be Aisha. With the exception of Aisha. What's interesting here is that Aisha, between 2000 and 2010, Aisha and Escorts did nothing. And 2010 and 2023, both, I mean, Aisha, not even 2023, between 2010 and 2022, that was the golden period for Aisha. You think about it, Mahindra and Mahindra, these companies are very old companies. Tata Motors, these companies are very old companies. It's
but
just
the revival has just happened.
Yeah, you sometimes hit that patch in that business curve where you become from unknown to unforgettable. And very few companies actually go through this kind of a transition, like Shree Cement. It was there. You always knew that Shree Cement was there. The management changes, the outlook changes, and then a cement company in last 20 years, which has turned out to be a mega multi-bagger. I think Shree Cement is one of them. We'll actually establish that. There you go. Eicher in last 10 years, 10x. Escorts in last 10 years is up 30 times. Maruti must have done nothing, 10, 12 years. And similarly, I don't think if you look at Mahindra and Mahindra, that kind of a relative outperformance is there. Devan, sometimes we look at the stocks and we say, okay, we know it existed, but after 5-6 years, you realize that they've just taken a giant leap forward. Escorts, Raymond's, Tube Investments, CG Power. Now, in markets, Devan, there is no point in reading history books. What I'm doing is, that's part of my job, is to talk about history. But you are the guy who can tell us about future. So tell us the next ones now. See, I have an easy job. I can talk about history, right? I can get away with it.
I spoke about so many companies. You talk about a sector and I'll give you ideas, not recommendations. Investors can do their own due diligence and buy. We spoke about capital goods and I gave at least 4 or 5 good stocks in which we and our clients have invested, and I would say, you hold them long enough, 3 years, 5 years, 10 years, who knows, they could turn out to be multi-baggers. And the key thing about this thing, Nikunj, is that when you invest in a stock, don't think it's going to be a multi-bagger. Just hope for consistent earnings. And I think if companies can compound earnings by even 17-18% or so for extended period of time, then you have a multi-bagger on your in your investment holdings. And this is true of the last so many stocks that I've seen for the last 10-15 years or so. The critical thing is to just remain invested and ride through the turbulence, because these are not dead products. They do not have a kind of a simple secular cash flow. There are ups and downs. And if you ride through these cycles, then certainly if the business quality is good, then India is such an amazing country that wealth does get created.
Since we're talking about the auto pack, Dipan, Nomura has come out with its latest note on what some of these, new bike names are actually up to, right? So with all the Harley Davidson, hullabaloo around it, the Triumph, this thing as well, and of course, the Hero tie-up as well. Nomura is saying that, good model finish, more metal, limited plastic usage, and most of these bikes from be it a Triumph or be it Hero, they're actually seeing 5 to 10 bookings per day. Wanting to understand whether it moves the needle for Eicher in the long haul or not. Because the numbers are minuscule right now, but yes, disruption surely is at play for Eicher, which has had monopoly in the space, in the premium end bike space for now.
See, I think every success story is going to attract competition, and and that also works for Eicher Motors. So, on the whole, yes, its market share certainly will dip. It's got 3 or 4 new competition coming in, but doesn't mean that Eicher Motors growth rates will suffer. I don't think so. I think that if they can easily consistently grow at 15% type of revenue top line for the next several years or so. And the main reason for that is that the entire transformation is taking place within the two-wheeler industry. And what Eicher offers is a kind of a lifestyle product. It's like a cult product, which I think the others will take many, many years to come to that. They have a huge export opportunity which they can explore. Eicher Motors themselves is ahead of the curve when it comes to launching new motorcycles, and all of their recent launches have been huge successes. They have the pulse of the consumer. They are in the right segment, that 250 to 350. And mind you, all the competition has come beyond the 350cc segment. Valuations are reasonable. So I would like to place my bets on Eicher Motors as amongst the top pick within the two-wheeler space. Again, disclosure, we and our clients are invested. And when you see this kind of wealth effect in the country, this urbanization taking place, increased consumer spending, availability of finance at attractive rates, then typically we are seeing a huge transition from the commuter biking segment to the leisure biking segment, where Eicher Motors is the king.
Depend, but I have a slightly differentiated thought here, and let's just supplement it with your point. Whether it is right or wrong, we don't know. But the leadership of Eicher for the first time could come under threat because of what Bajaj is doing, and given that there is a real threat which is coming from Harley and Hero. So markets know that your leadership will come under threat, and when typically markets know that your leadership is coming under threat, the P multiples can compress. So the company may do well, but suddenly the P multiple will get challenged. Isn't that a real threat for shareholders?
See, first of all, this is just some minor competition, and it will be many quarters before they can make a sizable dent and have pressure on the volumes of Eicher Motors and start to impact their strategies. What makes the success of a good auto company is distribution. It is brand building. It is consumer following. It is the quality of the models, how fast you refresh those models. There are many moving parts. It's not an easy business, to say the least. And market shares are fine, but shareholder returns are determined by secular growth in earnings. And just because some competition has come doesn't mean that Eicher's secular growth in earnings will get impacted. Our bet would be that the entire market expands rapidly, and on the whole, I think Eicher will be able to maintain its growth rates. Sure, even if the price to earnings multiple remains stable, then also I think it's perfectly fine, because Eicher can compound earnings per share by 16-17% or thereabouts. And that kind of a returns I'm pretty happy with. I think, if earnings per share goes up by 17% for next 5 years and the P multiple goes nowhere, I still have a winner in my portfolio.
Vaishali, I'll talk about a stock which normally does not pop up, but in terms of traders, they love to associate with the stock, and that's TTML. Big move yesterday. Do you track that one actively? Vaishali, TTML, Tata Teleservices.
Yes, actually, yes. I think this is a good trading bet, because yesterday we saw, first round of good buying happening, good volume. And I think this stock is looking positive because, these were all the laggards and now they have come into action. So I would say, yes, this can go towards 100 levels also. It makes a very favorable risk reward trade because we have seen a long consolidation, nothing happening in this stock. So I would say that, yes, 76 should be held as a crucial support level. And once we see a further candle coming up over here, I think the target ready for this is 92 to 100 levels.
Kunal, TTML, the ring of TTML, something which I think was discussed extensively in COVID times. Every day एक stock ऊपर जा रहा है, कुछ हो ना हो TTML ऊपर जाता था.
Yeah, I think the stock in COVID times, I think moved from some 7-8 rupees or 3 rupees or 4 rupees to 300.
100x.
Yes, 100x.
In 2 years. Biggest multi-bagger.
Yeah, but I don't track the stock.
Why? Biggest multi-bagger you missed.
So there are a lot many better options in the market. So
what else is popping up on your screen?
So from the PSU pack, GAIL is something which looks attractive. That's a stock which I think at 115 mark looks to be a good trading bet. BEL is something which you've been bullish on earlier. NTPC has managed to break past above a breakout as such. So many of the PSUs, the non-banking names, are the ones which are actually popping back on the radar.
Okay, that aside, some of the stocks that have had a pretty terrific run over the last 1 month, and we've been highlighting REC, so that stock has definitely been a smart mover. A solid 50% gain almost in the last month is what we've seen. There's been Adani Power as well that has charged through, about knocking on the doors of about 350. The stock has gained about 40% plus in the last 1 month. IRFC has been a smart mover, keeps on the gainers radar, and Godfrey Phillips as well has been another one, and smart double-digit gain in excess of 30% on a Godfrey Phillips as well. Have you had a look at the charts of any of these, Kunal?
Well, yeah, Godfrey Phillips is something which is interesting. That's a stock which I think has managed to come back after months of consolidation. There was a phase for Godfrey Phillips when the stock underperformed, its immediate peer ITC to a larger extent. I think 1700, 1500, 1550 was the consolidative zone for Godfrey Phillips, and the stock has moved past about those levels quite comfortably. I think on the way up, it's managed to break past its 200-day moving average by a decent margin. And I think right now the stock is almost at a 20% divergence from its long-term moving average, which probably comforts the trend and manages to absorb any kind of a short-term volatility. IRFC is also something which has been very interesting. Been tracking the stock over the last few months from 35, 38 levels. When this move started off for IRFC, the stock, I think at one point last week or so, the stock was almost at 50, 52 levels. So again, it's consolidative now. The history suggests, historical charts suggest that the stock gets into at least 1 or 2 months of consolidation before it migrates to a higher level. So I think 45, 44 could be a good zone to buy back IRFC.
Okay, that's the GIFT Nifty, by the way, indicating a mild bit of upside for us. Dipan, I don't know if you've gone through the Economic Times article which is reporting, source-based. When it comes to Torrent Pharma, they're looking to buy the Hamid family stake in Cipla, and that they're working with JP Morgan. They're going to compete against the likes of Baring PE, Blackstone as well. And they are looking to form a consortium with PE funds. The discussions, of course, are at a preliminary stage. Wanted to understand what this could mean for both Torrent Pharma, because this is going to be a large, sizable, meaningful, reputed acquisition at that, if they were to pick up, Hamid family stake in Cipla, and what it would mean for Cipla minority shareholders as well.
See, I think from Cipla minority shareholders, the more people in the fray to buy the Hamid family stake, the better it is, because there will be an open offer and, fresh value can get discovered. So I think it's great news. Cipla is one of the most outstanding pharma companies in India. And the fact that it has got so many suitors, I'm not surprised at all. I think the winner will certainly get into a very good quality company. And whenever we have seen change of management like this, it has worked positively for shareholders. Look at what happened in JB Chemicals and even then Unichem. So I think all the acquisitions which have taken place in the pharma industry have been very positive for both the acquisition, the acquirer, as well as the acquired company. And they have been able to, unlock a lot of synergy. So I'm very positive on this particular development in Cipla. Being a shareholder, again, a disclosure, we and our clients are invested in it. And clearly, I think, the more players come in the fray, the better the chances. I would be a bit worried for Torrent if it was trying to acquire it by itself, because that would become too much for it to chew and would certainly lay a great deal of stress on the balance sheet of Torrent Pharma. or it would lead to a lot of earnings dilution or equity dilution for that matter.
10, 11 stocks, and I think 7, 8 stocks you own. How many stocks do you own, my friend? Or is it just a coincidence that all the stocks we're discussing, you somehow own them?
No, Nikunj, we follow a very, I would say, safe strategy. And in my portfolio, I may have as many as 100 stocks as well. Positions may be small, but as a matter of disclosure, we need to disclose that some of them are trading positions as well. So from that point of view, we have to disclose it. And mind you, I hope all the stocks that I am telling you that we and our clients are invested, the common thread is good quality. I think that's the mantra. Quality businesses at reasonable valuation. That's not my mantra. That's Warren Buffett's mantra. And I think if you put it into practice and patiently invest for 5, 10 years, then you will get multi-baggers like Bajaj Finance, PI Industries, Tata Elxsi. Who knows? I think, these have been great value creators and have made the real difference between an ordinary portfolio return and an extraordinary portfolio return.
I'm sharing this point for our viewers because I've learned it last couple of days that if you look at the template of Indian markets, 90% of market participants, they have time frame of less than 1 year. 5% have a time frame of 1 to 3. And less than 2% market participants have a time frame of 5 year plus. But 5 year plus is where you can hunt real multi-baggers because the businesses, they become from great to, from small to big and from big to large. That's where I guess the magic of compounding and the magic of scale, ability and the market share gains they happen. So Dipin Mehta, let's wrap it up with one final question. I'll call this as Dipin Mehta's 5 year plus basket, where you would say I've got these 2, 3 names or 5 names in that 5 year plus basket where I don't care about what happens to the election cycle next year. I don't worry about what happens to Fed interest rate. I don't worry about the quarterly performance. I don't worry about what happens to valuations. Those are my 5 coffee can stocks where I'm happy to own them for 5 years and something seriously has to change in terms of the business proposition for me to turn a seller.
Oh, you are now putting me in the spot. To name 5 stocks is a big challenge.
Maybe 3.
You have 100, Dipan. I don't think that should be that difficult.
No, see, there are so many disclosure requirements, but with a lot of, I would say, again, I would like to mention that these are not recommendations. And investors should do their due diligence and buy these stocks. But what, we feel are, good emerging growth stories within the banking space. We like IDFC First Bank. It's been our favorite in the banking sector. And clearly, I think it would be a great compounding story. Within the engineering space, we like Praj Industries. It's a quality player. And with the way we are seeing the trends towards environment and environment-friendly fuels, clearly this company has an edge over there. When it comes to software, we are very positive on Tata Elxsi still at these levels also. It remains amongst the best performer. And although it's been a great value creator, I still feel that the best years are ahead of Tata Elxsi. Maybe not in terms of growth rates, but certainly they can scale up from these levels also. Within the auto space, we have discussed Eicher Motors still remains our top bet over there. And we are not at all rattled by the competition which has come in. It comes and goes. And clearly this company has gone from strength to strength. So 4 names for you as we speak. And I think within the pharma space, although we haven't invested, we are very impressed with the way Mankind Pharma is shaping up. It's just I want to get a right entry point where there's some margin of safety. It's amongst the most richly valued pharma company. So this is an idea which we are tracking closely, but we haven't yet invested. At some point of time, we could look at investment in Mankind Pharma as a measure of disclosure.
Okay, super. I think we eked out more than 5. So thanks so much, Dipan, for being candid and, of course, sharing with us your market outlook as always. All right, it's about 9:03 on the clock. So let's check in on those pre-open rates and find out what exactly it's spelling out for what could take place at 9:15 a.m. at around 19,445. That's what the pre-open rate is indicating. By the way, the currency just about touch and go with the 83 mark, now about 82.96 to the USD. Let's find out those mid-cap strategies as well from our chartists. And Kunal, a word on the rupee and your top mid-cap call?
Yeah, rupee is something which has been falling. I think it's broken that 83 mark a couple of weeks back. So expecting this drag to continue for rupee. We discussed this on the Chartbusters a few weeks back, that how 83 mark has been a major support for rupee, but I think we'll need to see that how the rupee behaves about that 83 levels. In terms of the mid cap name, GMDC is something which looks attractive. The stock yesterday made a fresh swing high. The volumes were at a 3-month high for GMDC, closed about that 190 mark. So would suggest a buy with a target of 212, stop us at 186.
Okay, let's find out, Vaishali, what exactly it is that you're looking at within the broader markets. What's the top pick?
So, well, I was focusing more on these NBFCs, that is L&T Finance and M&M Finance. So both these stocks, they look pretty attractive. So I would recommend M&M Finance today because after the recent high of 340, it has consolidated right at 275 to 80 levels and shown another round of momentum. The longer term chart period is also on a strong uptrend. So with a stop loss of 275, I would be recommending this stock for a target of 300.
Okay, there you have it. Those are some of the top recommendations flagged off by our chartists. What are the other top headlines then? And across the globe, US President Joe Biden will be attending the G20 leaders meet in India from the 7th to the 10th of September. A bilateral engagement is expected between PM Modi and Biden. Meanwhile, Delhi has declared a 3-day public holiday during the presidency. And Meta has announced the web version of the newly launched Threads app in a bid to retain professional users and gain an edge over its rival X. Meta CEO Mark Zuckerberg said on a Threads post that the web version will reach users in the next 5 days. Remember, Threads has crossed 100 million sign-ups within 5 days of its launch, but currently it's seeing a bit of a decline in its popularity. And of course, it's the final countdown for Chandrayaan-3, the successful landing on the lunar surface. That's going to take place at 6:04. Please be glued to your television screens. And there's prayers that are actually being conducted all across the country for its success. ISRO as well has been receiving messages from students wishing the space organization good luck. And meantime, who thought COVID is back to bite us? Mumbai has logged 14 new COVID cases. This is the 4th double-digit weekly count in a week. While no fresh deaths have been linked to the infection, nonetheless, the cases have been recorded. And all eyes will be on the FIDE Chess World Cup Finals, where India's chess prodigy R. Praganatha will be playing against the world #1 former champion Magnus Carlsen. Remember, Prag is the second Indian to have reached this tournament after the Grandmaster Vishwanathan Anand, and winning this tournament is going to bring India's dominance in the world of chess right back.